The economy is a complex machine with many moving parts. Today, we saw a mixed bag of economic news. Some indicators pointed towards growth, while others hinted at potential slowdowns. Understanding these signals is crucial for investors and everyday citizens alike. The stock market, often seen as a barometer of economic health, experienced a volatile day. Meanwhile, major corporations made headlines with strategic moves. All of this unfolded against the backdrop of newly released economic data. Navigating this economic landscape can feel like walking a tightrope. But by breaking down the day's events, we can gain a clearer understanding of where the economy stands and what might lie ahead. The stock market, a constant source of fascination and anxiety, didn't disappoint today. The Dow Jones Industrial Average, a key indicator of the market's health, experienced a rollercoaster ride. It opened with a slight dip, reflecting investor nervousness about ongoing global trade tensions. However, by midday, the market had rebounded, buoyed by positive news in the tech sector. A strong earnings report from a major technology company injected optimism into the market. This turnaround highlights the market's sensitivity to both global events and individual company performance. As the closing bell neared, the market remained volatile, ultimately ending the day with a modest gain. This seesaw pattern underscores the uncertainty that continues to grip investors. Beyond the stock market, the corporate world was buzzing with activity. A major merger announcement in the telecommunications industry sent ripples through the business landscape. Two industry giants decided to join forces, aiming to consolidate their market share and leverage their combined resources. This merger signals a broader trend of consolidation in the industry, as companies seek to compete in an increasingly digital world. Meanwhile, a retail giant surprised analysts with better-than-expected quarterly earnings. This positive news suggests that consumer spending, a key driver of economic growth, remains resilient. However, not all news was rosy. An energy company announced job cuts, citing falling oil prices and reduced demand. This serves as a reminder that economic challenges persist in certain sectors. Section 4. Economic Crystal Ball, decoding the latest indicators. Beyond the headlines, economic data released today provided further clues about the economy's trajectory. The Labour Department reported a slight uptick in unemployment claims, suggesting a potential softening in the labour market. While this increase was modest, it bears watching in the coming weeks. On a more positive note, the Commerce Department announced stronger than expected retail sales figures. This suggests that consumers remain confident about the economy and are continuing to spend. However, the Federal Reserve's preferred measure of inflation, the Personal Consumption Expenditures (PCE) price index, remains stubbornly below the Fed's 2% target. This persistent low inflation continues to puzzle policymakers and could factor into future interest rate decisions. Section 5. Global Economic Playground, International Influences. It's impossible to discuss the US economy without acknowledging the interconnectedness of the global marketplace. Today, news from overseas had a tangible impact on domestic markets. Trade tensions between the United States and China continued to simmer, creating uncertainty for businesses and investors. The value of the US dollar fluctuated throughout the day in response to these trade developments. A stronger dollar can make US exports more expensive, potentially impacting economic growth. Meanwhile, economic data from Europe painted a mixed picture. Germany, Europe's largest economy, saw its growth forecasts revised downward, raising concerns about a broader European slowdown. However, other European economies showed signs of resilience, highlighting the uneven nature of global growth. Section 6. The road ahead, charting the course of the economy. As we navigate the complexities of the economic landscape, it's clear that uncertainty remains a constant companion. The stock market's volatility, coupled with mixed economic data, makes predicting the future a fool's errand. However, by staying informed about the day's key economic events and understanding the forces at play, we can better position ourselves for whatever lies ahead. The economy is a dynamic and ever-changing entity. Staying engaged, asking questions, and seeking out diverse perspectives will be crucial in the days and weeks to come. Only by embracing this spirit of inquiry can we hope to make sense of the economic rollercoaster and make informed decisions about our financial well-being.